In a historic surge, Ethereum ETFs recorded a staggering inflow of over $1 billion in just one day. This marks a pivotal moment for institutional investment in cryptocurrency, as Ethereum appears to be outpacing Bitcoin in the race for dominance. Looking ahead, the trajectory of Ethereum will depend on several critical factors. Recent trends have shown a significant uptick in institutional investment, particularly through exchange-traded funds, ETFs, that focus on cryptocurrency assets. This influx of capital has energized the market, providing Ethereum with the momentum it needs to potentially break previous price ceilings. The sustainability of these ETF inflows is paramount. If they continue at this pace, Ethereum could maintain its upward momentum and possibly reach new all-time highs. Historically, Ethereum has been positioned as a leader in decentralized applications and smart contracts, but it faces stiff competition from Bitcoin, which has long held the title of the dominant cryptocurrency. The ability of ETH to convincingly break above its previous highs will attract new momentum buyers, further solidifying its position in the market. Additionally, the question looms: can Bitcoin regain its leadership status in the cryptocurrency market? Should Bitcoin cool while Ethereum continues to draw significant flows, the market narrative may increasingly shift toward Ethereum and other large-cap altcoins. The impact of these developments is profound, as a shift in investor sentiment could redefine the cryptocurrency landscape. Institutional interest is diversifying, leading to a broader acceptance of various digital assets. This evolution may create a more balanced power dynamic among cryptocurrencies, reducing Bitcoin's historical monopoly. Investors will need to stay vigilant, monitoring these developments closely. As Ethereum and other altcoins gain traction, the focus will likely shift towards their unique use cases and technological advancements. The answers to these questions may not only influence market dynamics, but also reshape investment strategies for years to come. The coming months will be crucial in determining whether Ethereum can solidify its position as a leader in the digital asset space. The current momentum behind Ethereum can be traced back to several key developments over the past few months. The introduction of spot Ethereum ETFs has provided institutions with a streamlined avenue to invest in ETH through traditional markets. This accessibility has been pivotal in attracting significant capital from institutional investors who were previously hesitant to enter the volatile cryptocurrency space. Additionally, the broader cryptocurrency markets have entered a strong risk-on phase, characterized by improving market sentiment and a rising total market cap, which has fostered a favorable environment for Ethereum's growth. Ethereum's ecosystem has remained central to major innovations in decentralized finance, stablecoins, and tokenized assets, which have kept it relevant beyond mere price speculation. As more decentralized applications are developed on its platform, Ethereum solidifies its position as a leading blockchain technology. Historical comparisons reveal that Ethereum's shift in focus from being a Bitcoin alternative to a primary institutional asset mirrors similar trends seen in the past with other asset classes, such as gold and real estate. The increasing recognition of Ethereum's potential by institutional investors signals a significant shift in the perception of cryptocurrencies as viable investment vehicles. This trend has the potential to drive further capital inflows and enhance market stability. As Ethereum continues to evolve, its robust infrastructure and community support suggest that it is well-positioned for sustained growth. Looking ahead, Ethereum's ability to adapt to regulatory changes and technological advancements will be crucial in maintaining its competitive edge. With institutions now viewing Ethereum as a cornerstone of their digital asset strategies, the future appears bright for this pioneering blockchain. Investors and stakeholders alike should prepare for a transformative period in the cryptocurrency landscape, as Ethereum cements its role as a key player in the financial ecosystem. The recent record inflow into Ethereum exchange-traded funds, ETFs, marks a pivotal shift in the cryptocurrency landscape. Traditionally, Bitcoin has dominated institutional investment, often viewed as the gold standard in the crypto realm. However, the latest surge in Ethereum ETF investments signals a growing recognition of Ethereum's unique value proposition. Ethereum's robust infrastructure, particularly its role in decentralized finance, DeFi, and smart contracts, has attracted substantial attention from large-scale investors seeking diversification in their portfolios. This shift is not merely a fleeting trend. It represents a broader evolution in how institutional investors perceive cryptocurrencies. The significance of this development cannot be overstated. Ethereum's ascent as a viable alternative to Bitcoin indicates a diversification of interests among institutional players. As these entities increasingly recognize the potential of Ethereum, they are likely to allocate a larger share of their digital asset investments to this blockchain platform. This change underscores the growing maturity of the cryptocurrency market, where multiple assets can coexist and thrive, rather than solely relying on Bitcoin's performance. The immediate consequences of this trend are already visible. Increased capital inflow into Ethereum is expected to tighten supply, which could further enhance bullish sentiment around ETH. As demand rises, prices may rally, reinforcing Ethereum's position as a strong contender in the crypto space. For existing and potential crypto investors, this development signals that Ethereum may demonstrate stronger relative strength compared to Bitcoin in the near term. Furthermore, as institutional interest in Ethereum grows, it may catalyze a new wave of buying across the broader altcoin market, as investors look to capitalize on the momentum generated by Ethereum's success. Looking ahead, the implications of this shift are profound. As Ethereum solidifies its status in institutional portfolios, it could pave the way for increased innovation and investment in DeFi applications and tokenization projects. This evolving landscape will likely encourage further regulatory clarity as institutions demand more robust frameworks to support their investments. Ultimately, Ethereum's growing prominence could reshape the future of digital assets, fostering an environment ripe for groundbreaking developments in blockchain technology and its applications across various sectors. As Ethereum gains traction, its influence on the crypto market will only intensify. On May 20, 2026, Ethereum's spot exchange-traded funds, ETFs, experienced an unprecedented inflow, surpassing $1 billion in a single day. This remarkable event marks the largest inflow ever recorded for this type of investment product. The surge in capital coincided with a broader cryptocurrency rally during which Bitcoin reached new all-time highs. However, Ethereum notably outperformed Bitcoin on a percentage basis, highlighting a significant shift in market dynamics. Other cryptocurrencies, including Solana and Dogecoin, also saw substantial gains during this period, indicating a widespread bullish sentiment across the crypto market. The meteoric rise in Ethereum's popularity is not an isolated incident. It reflects a culmination of weeks of strong market momentum, driven by various factors including regulatory clarity, technological advancements, and increased adoption of decentralized finance (DeFi) applications. Institutional investors, who have historically favored Bitcoin as the primary cryptocurrency, are beginning to diversify their portfolios, shifting focus toward Ethereum and its potential use cases. This shift is significant, as it demonstrates growing confidence in Ethereum's long-term potential and utility in the evolving cryptocurrency landscape. The impact of this influx of capital into Ethereum's ETFs is multifaceted. First, it signals a maturation of the cryptocurrency market, as institutional investors are now more willing to engage with assets beyond Bitcoin. This influx may also lead to increased liquidity in the Ethereum market, facilitating further price appreciation and stability. Additionally, the strong performance of Ethereum could encourage more retail investors to enter the market, potentially leading to a broader base of support for the cryptocurrency. Looking ahead, analysts are optimistic about Ethereum's trajectory. With recent developments in Ethereum's technological upgrades, including the much-anticipated transition to Ethereum 2.0, many believe that the blockchain's scalability and energy efficiency will enhance its attractiveness to both investors and developers. As institutional interest continues to rise, Ethereum's role in the cryptocurrency ecosystem is expected to strengthen, possibly positioning it as a leading asset in the digital economy. The current momentum suggests that Ethereum may not only challenge Bitcoin's dominance, but could also redefine the parameters of success within the cryptocurrency market, paving the way for innovative financial solutions. What do you think will happen next in the cryptocurrency market? Will Ethereum maintain its momentum, or will Bitcoin reclaim its dominance? Share your thoughts in the comments, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.